Hey, what's up, guys? Alan here with EatSleepTrade.net. Gonna be bringing you guys a swing trading watch list for the week of February 22nd, 2016. As I'm sure most of you are aware, the market has not had the best start to this year, and there's been a lot of indecision on whether we're going to get a dominant bull market to return or if we're going to get a dominant bear market and really start to see a much larger sell-off over the overall market and the S&P. So first thing, we will take a look at a couple of areas that we're watching on the SPX, and then get into the rest of the stocks on our watch list. Not saying that we are completely bullish on anything, but if opportunity arises, you always want to be prepared to take advantage of that opportunity. If we get a big breakout in the market, you could expect to see a lot of stocks move, and you want to be prepared to get in and get out and lock some profits, because who knows when the next time you'll get another opportunity will be. Alright guys, so let's take a look at the S&P and we'll jump into the watch list. Alright guys, so taking a look at the S&P here, you guys can see this 1800 area is going to be a very major support area all the way back to May of 2014, April of 2014. So for a bottom line, that's the area that we watch is our prior lows here down on that 18. Now, as far as resistance areas goes, it's all about this 1950 area right now. You could see our 50-day moving average is making its way towards that 1950 area, and if we make a breakthrough that, we could test this 2000 area, as that is a pivot point for us right there at that 2000 mark. Last week the market had a really strong week. Just had a nice 3-day ramp right back up, and now it's pulled back and consolidated a little bit, but it hasn't completely sold off, which is always a good sign. You can see the obvious indecision whether we bring it back down to test 1800 or do we push it higher and test that 50-day moving average. Right now I'm leaning more towards testing that 50-day moving average and maybe making a breakout move over it, and being a bullish sentiment on a shorter term time frame. I'm still more bearish in the overall market, and there's still a lot of work to do to convince me that we are definitely going higher. So next week I'm going to be looking for basically continuation breakout here over 1950, try to get that test up 1990 to 2000. If we don't hold above our 20-day moving average, then I would expect to test back down to 1800, and of course if we fall through there, who knows where the next bottom is going to be after that. Alright, so let's take a look at TCK. Have this one on watch for a minute and was actually able to get a trade in it last week, so that was pretty cool. Bought in on this day, held it overnight for the gap up, sold into this day right around 530 or 40, I believe. So still left a lot on the table as the stock ran all the way over 640, but was still a good trade. And if you get involved and you're in a breakout day like this, number one rule, lock in the profits. You could see our long-term downtrend as we're starting to peak out from under that, so that could signify a little bit of a bottom, and now we've got a great flag setting up on this. So next week we just look for a flag breakout on that, and if we get a move over 640, I don't see why we couldn't test these prior highs up here around 830. So could set us up for another pretty big range move. Next up on the list, let's look at AGRO. Now we talk about this stock a lot, and this stock is a perfect example of what I like to trade. I like to trade a stock that's bullish, that's trending up, and that will set up for me over and over again and give me multiple opportunities, because the reality is you're going to miss more opportunities than you take. But if a stock continues to set up for you, then you've got a much higher probability of getting multiple breakouts. So for example, we first added this onto our chart right back here on this breakout of the consolidation, and we had a nice huge breakout to the top side. Secondly, a month or two later, we put in a top up here around 1150, pulled back, and before you know it, we had a breakout of that 1150 area. And again, a big range move. Even if you were to get in at 1160, 1170, you're talking a move that came all the way up to 1250. So almost $1 worth of range, 70, 60, 70 cents right there in 2 days is a very viable move, and I'll take that all day long. And then again, as the market started to pull back, this stock held up really well compared to the other things that we've seen. And once again, consolidated, perfect little breakout of that consolidation, and a huge move from under 12 to over 13. And again, now we're setting up for a perfect little flag right here. And this is going to be one of my main watches in the next week, is for that break over 13 and a push to new 52-week highs, which this stock loves to do. So a perfect example of, just because you miss a trade, keep it on watch. If the stock remains bullish, it's going to continue trending up, and it'll set up for you multiple times. Next up on the list is QUOT. I like this one here, mostly just because we had that big relative volume and breakout day. This is the day that we put it on our watch list, and it gave us a perfect little gap down, red to green, and a huge breakout and a push higher. Now it's consolidated for 2 days back, and Friday made a move back towards that breakout level. I think there's going to be a lot of shorts that are in this already, and if we get above 9, I think we could start to put some pressure on the shorts. If we get above 950, I think that gives us opportunity to make a pretty big squeeze. Our 20-day moving average is just about to cross above our 50, so that 9 to 950 resistance area is really going to be key next week. If you're able to get in around a $9 break, that's where your support's going to be, and if you get back below that $9 area, that's really where you're going to want to set your risk on that one. Next up on the list, let's look at CC. So this is a fairly recent IPO, less than a year old, and it's kind of coming down on its bottom and rounding off here. And we had this insane relative volume, over 30 million shares traded on this random day right before February. And we actually got a trade in this one as well on this pullback breakout. So it was nothing major, but we got in around 380 and ended up selling in over $4. So, it was only 30 cents, but when markets are tough like they are right now, 30 or 40 cent moves are fairly decent moves. For now, we're holding over our 20-day moving average, and we're really going to be watching this 450 area, which is also the area where our 50 days coming into play here. And I think if we get a breakout above that 450 area, we could really see a push higher. Now let's take a look at BGG. Briggs & Stratton has been on a just insane tear. I mean, coming from 15 to 21 within a month or less, and now here we are testing a 2-year high or a 2-year resistance area right around 21, and actually getting the breakout above that. So I really like the opportunity this one's giving us. You could see the breakout of our flag right there into new 52-week highs, really 2-year highs, and I think that alone could really push this thing up there, as there's not a whole lot of overhead resistance until we get up to these higher areas around $22.70, $23. Next up, EIGI. So you guys can see the basic downtrend that it's been in, and now Wednesday, Thursday, Friday had a pretty big pop. All about 2 weeks ago, had this nice big run, came all the way up to test that trend line and sold off. Looked like an obvious short, gaps down, sells off to $8, finds the support, and then rips all the way back over 10. So we could definitely see some short squeeze potential here, especially now on Friday that it's held up, staying above that $10 area. And I'm going to be looking for a move over the prior high here around 1068. So if we break out of this high, we could definitely see another squeeze start. Maybe we need a little bit more consolidation before this thing breaks out higher, but definitely something to worth having on your watch list. WMGI, just another similar little setup where we had a big huge sell-off, found its bottom, made a little pop, and now it's consolidating a little bit and holding up. And just that little bit of holding up is what gets me interested. You see a big move, big relative volume, and it starts holding up. You look for that second breakout. So we'll watch for a move over 1750s, and that could take us to a test to our 20-day moving average, which is around 1830s right now, or maybe even a test around this area here, which is around 1862. So a move over 1750 could actually give us a pretty decent move up to around the 1850 area. Next up, let's look at DEPO. So not my favorite chart that I pulled off Invis this week, but something to me that is worth watching. Again, you can see the downtrend. We're starting to break out of that downtrend, pulling back, and we're holding up nicely on the 50-day. We're above both our 50 and 20-day moving averages. So if we get a move back over this high of around 1830, we could see a push up and a pretty decent breakout to these prior highs, maybe even up to 2180. So you've got a lot of decent range on this stock with opportunities if we do hold above those averages and we see that breakout in the next week. And lastly, let's take a look at SUM. This one here, we just went on like a 6 or 7 day pull, getting above our 20-day moving average, testing above our 50-day moving average, and now we've pulled back a little bit, and we're really at that perfect 40% retracement mark right here, which is what you want to see on a pullback. And you got a nice dragonfly doji right off the bottom, and finding support above its 20-day moving average. So I'm definitely going to be looking for a move into this one, with a move back over 1650, which would be just above Friday's high. And I think we could see a nice ramp back towards these previous highs if that one works out for us. These highs up here at 1850. So that's going to give you $2 worth of range. We had $5 worth of range on this previous run right here. So even if we can get half of that, $2, $2.50, that would be a pretty good second wave. Alright guys, that's going to wrap it up for the watch list for this week. If you have any questions or suggestions, please leave them in the comments below. Don't forget to like and subscribe for future videos. Also, check out our website, eatsleeptrade.net. From there, you can follow us on Twitter as well as like our Facebook page, so you can stay up to date with all the stocks that we are watching and trading. Alright guys, thanks for watching. Good luck into next week and stay safe.